Hello everyone, welcome to Geojit Spotlight. As we bid goodbye to 2023, it is important that investors plan, analyze and re-strategize their investments for the new year. During the constantly evolving dynamics of the stock market, it is important that we gain fresh perspectives on investments for the new year. We have with us Mr. Satish Menon, Executive Director of Geojit Financial Services, to share his insights, expectations, and what the investors need to look forward to in the new year. Welcome, sir.
Thank you.
So let's get straight to the point. 2023, I would say tale of two halves, maybe volatility in the first half, second half, again, we saw the market scaling new highs. What do you think was the drivers for, the stock market performance in the year 2023?
So 2023, like you correctly said, it is two half story. The first half, or not even the first half, actually the first 9 months did not give you much returns. It gave you, but much lesser than what you had expected. And the months after that, that is maybe October, November, and now December, it has given you fantastic returns. Has anything changed largely in the economy? Has anything changed largely in the world economy? Maybe not much, but the forecasts have changed. What you have seen now, especially in the last 2-3 months, you are seeing a signal of the interest rates maybe coming down in the next 3 to 6 months. You are seeing inflation getting tamed. So these are the forward-looking statements which the market wants to discount today. Our market works on sentiments, and sentiments is forecasted, if not 6 months, maybe 1 year, 2 year down the line also. So the things are changing for good as of now. So like you rightly said, first half or first major portion of 23 was not that good, but the last 2-3 months of 23 has been good. I think this will continue. This will continue for some more time. So normally we see a pre-election rally, and that I think has started. And I don't see any reason why it may not happen in 24. I think it will continue. Post which, of course, we'll come back to basics. Economy, world economy, inflation, interest rate, and majorly how the corporate earning works.
So you're expecting a continuation, at least for the near term, the positivity that we are seeing right now, the year-ending highs, it should continue for the near term, or at least till the election.
As of now, I don't see any reason why it should not continue. So history shows there has been rallies, and as of now, I think the rally has started, and I don't see any reason which will negate this fact as of now.
So the market always likes continuity, and you were mentioning the elections, which is going to be, I think, one of the talking points for the next listing. Assuming that something happens that, what the market is not expecting, do you think that will have a long-term impact on the markets as such?
Like you said, it's a talking point. And talking point has a small history, limited history. And I'm sure you would know in the last 30 odd years, we had many governments. And the main thing is market wants continuity. As of now, the market is expecting continuity. If the continuity doesn't come, that could be a short-term reaction. Knee-jerk, maybe. But the way India has been built over the last 30, 40 years, I think the long-term impact of the growth in Indian economy is never going to be affected. So if anything unforeseen happens, which is not as of now discounted, not expected, there could be a short-term reaction. But I'm sure in the long term, nothing can change the trajectory of Indian economy. And that will be ultimately reflected in the stock.
Right. So everybody is talking about the India growth story, the Indian growth engine being robust and strong, especially in the last few years when, there has been concentration of, let's say, manufacturing and this thing. So do you think that will also continue, in the sense, are we on the right track towards a long-term growth?
Absolutely. I mean, there is no doubt in anybody's mind the way India is going. Maybe slow compared to what China did. But the growth trajectory of India is constant. One of the fastest growing economy right now. Maybe the fastest. last quarter 7% growth. 6.5%, 7% growth is what is expected. And if all the ingredients are put in right places, maybe you will see 8% plus growth also in the coming years. Who knows?
To have somebody mixing it in the right manner.
So that is what continuity we were talking about. So the continuity is more important, if not a short-term knee jerk. But otherwise, the trajectory is very clear. I don't think there is anything which can, as of today, disrupt that growth trajectory.
So one of the important, I think, the hurdles that we faced, especially in 2023, was the geopolitical tensions that were there, the inflation, not Indian inflation, but maybe the US inflation impacting the Fed rate hikes. So will that also be a talking point maybe in the coming year?
Till that time you are decoupled, which you are not. Everybody is linked to each of these things. So all this US inflation, US economy, global interest rates, all these things are going to affect. But the silver lining is what we have seen in the last 2-3 months, or especially in the last Fed announcement. There is a talk, or there is a feeling that interest rates have peaked, inflation has peaked. Now it is time for it to come down. Maybe it will not happen in the first 3-4 months of the calendar year, but post which people are expecting a cut in the interest rate in the US also. And if that happens, money should move back to equities. And for FIIs especially, I don't think that there are many countries which is as attractive as India on a long-term basis.
So since you brought up this FII, FPI topic, we saw that in 2023, maybe in the beginning, there was not too much of involvement from the FIIs, but our domestic investors were always very active, very strong, especially through the SIP route. And then post that, as you said, once the Fed rate comments came out, Federal Reserve comments came out, we saw the FIIs again coming back slowly. Is this the play that is again going to play out? I mean, DIIs will always remain strong, FIIs coming in and going out. And do you see any, profit booking also happening for the DIIs as such?
Profit booking is a part and parcel of stock markets. But more than that, what I'm very happy to see is the involvement of Indian retail investors into the stock market. Now your SIP monthly inflows have crossed 16,000 odd crores, which is maybe 3-4 times what we saw 6-7 years back. Like you said, the first few months, or the first half and more than half of this 23, FII selling was there. And if you look at history, when you see such a large amount of FII selling, the market goes down by 10, 15, 20%. But this year it has not. In fact, it has actually gone up. It is primarily because of the retail investors' money which is coming to mutual fund. So they have stood as buyers when FIIs were selling. And now when the reverse is happening, that is FIIs have started buying, they would play a little bit subdued role. But you need to understand, every month 16,000, 17,000 crores coming in SIP route is a good catalyst for Indians to invest in this market to nullify any negative impact of FIIs. I think as the Indian economy grows, the disposable income of Indian investors grows, money allocation to stock market will continue. You will have ups and downs. You will have investments in the top quartile. You will have investment in the bottom also. But that is the charm of SIPs. You invest in all the markets so that your average cost comes down. And I think, as history has shown, equity investment will always beat any other kind of investment over a longer period. And I think that trend will continue. So maybe in 2024, you will see both of them, FIIs as well as retail,
both of them coming in.
investing and taking the market up. Who knows?
So one question now in the minds of investors, especially after the last rally, 3 months rally, is it time to book profits? Are the markets overvalued? What should they be doing? As a normal retail investor who invests only into stocks, would you be suggesting them to, at least book profits or maybe reshuffle their portfolio a bit?
Good. You specifically made a normal retail investor. I presume this normal retail investor um, is 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 kind of a layman who has, of course, some other job, and investment is only for his future.
Future planning. Yes, yes.
So I think the answer lies there. Has your goal time reached? If your goal time has not reached, please continue to stay invested. If your goal has reached, no matter how the market is, you will need to book profit. Uh, to come back again to this question whether to book profit, maybe a small change. In 2023, you have seen mid cap and small cap going too much, and large cap has not actually gone as kept the pace with those two sectors of mid and small. Maybe a small reallocation, put more money into large cap, and maybe reduce your dependency on mid and small. But this is as far as a little bit informed investor is. Informed investor, of course, can take a lot of calculated decision. Okay, you feel the interest rate is not going to go down. You feel the inflation is not going to go down. You feel there will not be any quantitative easing in the US. All those factors, you can take a call. Okay, sit out of the market for some time and come back. But it is very difficult to time the market. My advice to people is, till that time your goal is reached, stay invested.
Sit tight on your right. So we saw a lot of sectors also, especially in 2023. There was a lot of talk on defense-oriented sector performing well. The Make in India theme happening. So will that theme continue again in 2024, or do you see any sectors? I mean, we saw IT sector not performing as well, in the first half. The banking sector not performing well in the first half. So do you see any sector rotation happening in 2024?
Sector rotation happens. You should be smart enough to catch it first. I don't know how many of them do it. What we can have is, we can have a broad view on which sector will work. Maybe it will work today, or maybe it will work after 6 months. But that is not the point. The point is long-term investment. By the time everything is settled down. You specifically spoke about IT. As of now, we have a muted response to that. There, of course, has been some green shoots in that sector as of now. But maybe let the first, maybe let the first 3-4 months of 24 go. Then we will have a better call. There is some green shoots happening, but it's not yet clear enough for us to start aggressively into that. Renewables is something which we are looking at. Manufacturing, something what you said, that is also looking good. Real estate also looks good. There are a few sectors largely, but it is more on the company what you choose, obviously.
So, I mean, anyway, the closing comments, let's say 2024, the years ahead, you mentioned in your talk also that, it is not just a 1-year story or 2-year story, it is a very long-term story. So what would you like to end your talk advising investors? What would you advise investors for, the year ahead?
On the short term, don't expect too much returns in 2024.
Right.
As I said, 10 to 12% may be a good return for 2024. The market has to adjust towards the growth in this calendar year, and the profits of the company has to catch up, which will obviously happen in the long term. But in 2024, keep your expectations low. But if your approach is long term, which is what we tell all our clients, that if you do not have a long term approach, don't come to equities. Equities can be very volatile, can make also loss in the short term. So if you have a horizon less than 3-5 years, please don't come to equities. If you have a horizon of 5 years, I think the next 2-3 decades is going to be very well for Indian economy and Indian stock markets. So with that perspective, please continue to invest. If you have not started investing, I don't think it's a wrong time to start also in a systematically invested mutual fund. Put in small amount of money every month, and as and when your income increases, top up your investment. That will definitely make you money in the next 2-3 decades.
So there we have it. Mr. Satish Menon, Executive Director of Geojit Financial Services, with his valuable insights for the year ahead. As you were saying, the expectations need to be a little bit controlled for 2024. But for a long-term investor, definitely equity directly into stocks or via mutual funds is the way to go, and that is where you should be in the years ahead. Thank you very much, sir, for your valuable insights. Thank you very much, and happy investing.
Thank you, Sony, for having me. And with this medium, let me wish all our clients a very happy 2024. Thank you.